How's it going, everybody? I'm the BTC Reaper. I've been trading for 5 years and have had a few great mentors that have helped me go from a trading noob to a profitable trader. My goal on this channel is to help you make money whether the price goes up or down, no matter what market you are trading in. You might be wondering, why does support and resistance even matter? Well, the answer to that is that support and resistance can help make up almost every pattern you're going to use when you are trading. And that can help you lock in which direction price could be going. Have you ever bought an asset and then it went down right after? It could have been at a local resistance level. And hopefully by the end of this video, you'll be able to tell what happened in that case. Support is an area that is created by buyers accumulating an asset at a fair value price or a good price. For example, if Apple normally trades around $150 and you see it's $100 today, it wouldn't be a bad idea to pick some up in anticipation that it would go back up to $150 sometime in the near future, if you're not dealing with a bunch of economic issues like we are right now. Resistance is created by sellers selling an asset because they feel that the asset may be a little overextended in price, or maybe it hit their price target from a pattern that they saw. These levels of support and resistance are what create the price fluctuations that you see on the chart from day to day, hour to hour, whatever time frame you are using. Alright, so again, we are at a basic chart, nothing's here. If you go to the second object, you can get a trend line and a bunch of other tools like a horizontal line. The trend line and the horizontal line are the two that I tend to use to map my supports and my resistances. So real quick, if we go right here, you see a few candles touching. We can zoom in a bit. So you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, a few more. So quite a few candles touching that. That shows you that is a good support area or a good resistance area. If you had a line here, yeah, click the tool again. If you have a line somewhere like here, we only see a couple of touches. So that would not be that strong of a zone to have. Instead, you would want to go for a zone like down in here. So this would be a zone where you have a support here and a resistance here. Unfortunately, we've been locked in these tight channels lately, so the way you would trade in a channel like this is if you see prices going down, you would wait, and then once you get down to your support area, you could buy in if your other indicators and other analysis is telling you this is a good area to buy and that price could go up. Then you could sell up here. You could sell close to the line. That would probably be a better zone because you don't go over your supports or your resistance typically too much. It's always better to take a little less profit than to take no profit at all and end up holding something that could end up crashing. Because if you didn't get out by here and you wanted to be greedy and keep holding, you'd be stuck down here. And as a swing trader, that is not an ideal place to be. So we'll get rid of those real quick. Some major areas of support and resistance can also be psychological levels, like 40,000 here, and we'll go 50,000. The reason that these areas of support and resistance are created is they're more of a psychological area of support and resistance. It's not necessarily because of price action, it's more because it's a new whole number. Even numbers like this tend to be areas where people can kind of have mental areas of support and resistance instead of just based on previous price action. For example, if you're trading at $192 on a stock and it gets to $200, you might have some trouble getting over that 200. You might fall down before coming back up and breaking through that area. And that's because of that psychological barrier that is in place because of that new even number that people see. We'll go over in our later videos how support and resistance play into patterns, but for now, just remember that when you're going up, you're meeting resistance, and when you're going down, you're going to find support. So if we go back in our channel, if you look here, we have this big red wick that came down and hit our support, and then we wound up bouncing up to our resistance area. As you can see, we kind of fluttered around, didn't break our resistance, and that made us come back down. We kind of came back up, broke resistance, but we tried flipping it to support here. We got a couple candles to close above, but ultimately we broke through and fell down again. You can see we fell down to our previous support area, and we broke that support area later. We did manage to come back up through it, but we never touched on this resistance again. So we broke through that support, and right here you can see this support got flipped into resistance. That's something to pay attention to as well when you are trading, because if you bought in, say, right around here, and you were playing for it to go up here, and you see it flutter and break a little lower, you can see a few candles close under this level. That might signal to you, depending on your other indicators, that the price action for the uptrend is exhausted and we're going to start coming back down. Likewise, if you start closing candles above your support area, you could start to see that you might climb back up to your resistance area, and you could buy in down here and sell up here. Us not getting fully to resistance is another example why you don't always want to target the exact top of your supports and your resistances for your entries or your exits, because you might not get the exact number, but generally you're going to get pretty close. Thank you for watching this video. I hope you learned a lot of valuable information today. Let me know what you thought down in the comments below, good or bad. Please like and subscribe to my channel. Thank you and have a wonderful day.